Hello and welcome to another installment of Terry's Tuesday Tips. This week's is about how to determine risk size. I'm going to introduce a worksheet that will allow you to punch in your numbers and it'll tell you your risk size that's best to use. You can determine which size you want to use, whether it's per stop loss or lot size. Let's give you a little bit of time here to read our CFTC required disclaimer. Just says to not risk more than you can lose, not risk your mortgage, bill money. Common sense. Okay, let's move right along to our little tool here. This will be available to our members. I will upload it when I upload the video to our Slack chat, so you'll have access to this. So it's real simple to use. Just assume you have a $3,000 equity in your account, and professional traders, they only risk 1 to 2% on most of their trades, but see, you have a smaller account, you only risk 5%, so you just punch in whatever percentage you want to risk right there. And whatever pair you're trading, because each pair is worth a different amount per pip. So let's say we're trading Aussie CAD, and we want our stop loss to be 100 pips. Okay, for risking 5% on that trade, you can trade as much as 0.19 lots. Okay, let's see how much that would equal to how much you could win by trading that many, that size lot. So down here we go down, we punch in 1.19 lots, and then you put in whatever profit you're going for. So if you're going 1-1 ratio, 100 pips. So each pip is going to be worth $1.52. If you take profit on a trade, you can make $152. Now this does not include your fees of your broker, commissions, or any other fees that they charge. So consider this your gross, what you would make. Then you have to subtract all your fees and such. If you want to use a big stop loss, say 200 pip stop loss, you still only risk 5%. Then you can trade 0.09. Go down here, 0.09. If you're going for 100 pips still, it's not 1-1, but you're worth 72 cents a pip. You can make $72. For those of you who know that we've paired up with Top Step Trader, you know they allow you to trade a $300,000 account. Let's see if you want. But you can only start off with trading 3 lot size, so you can see how big of a lot size you could actually trade. They do that for a reason, so that it's a money management thing. So you could trade that many lots with a $300,000 account at 5%. Like I said, most professionals trade 1 to 2% of their account. So if you come down here and you put your 3 lots you were trading, it's worth $24 a pip. And you can make as much as $2,400 if you took profit on that trade. Trading 3 lot size. But my advice is, just because you can trade that many lots, don't ever trade the maximum number of lots you can trade. especially with someone like Top Step Trading. Because once you get behind, if you lose that trade and you get behind, it really makes it difficult to catch back up. So trade conservatively. It's not a get-rich-quick profession. So most people start out with $500. We'll do some more. Start with $500 in. With a $500 account, you're gonna have to trade 5%. I don't necessarily suggest more than that. And if you're trading something like with our cruiser or copier, we usually start off with 200 pip stop. So you could trade 0.02 lots. That's per position, and you're risking 5%. But just remember, each trade you take at 0.02, that's 5% of your account. So if you trade 4 positions, that'd be 0.08. You're actually risking 20% if you do it that way. So then we come down here and put 0.02. I don't know what your profit pips would be. Assuming there are only 20 pips, you make $3.20. Because your price per pip is only 16 cents. Over here is a breakdown of pretty much. These are rounded, I should say. They're rounded up. Because, like pound New Zealand, technically I think it's like 0.74 cent for micro lots of $7.40. It depends on the broker. So, I just rounded all these up. So Aussie CAD's worth $8 a standard pip. Aussie Swiss, Aussie Yen's worth 8. You can see all these, what they're worth per pip. This is a little different than this over here because it takes the lot size and multiplies it times the dollar per pip. So if you only were trading one lot, see, CAD Yen worth $8 a pip. That's a standard lot. So if you were to trade one standard lot and took a profit at 20 pips, you could make $160 before fees. So it's pretty simple, straightforward. I think everyone should be able to figure it out, not a problem. Just punch in your equity. If your equity is only $250, you want to trade 5%, you're only going to be able to trade with 200 stuff. Of course, if you change your stop loss, your lots that you can trade is correlate with your stops and your risk, and considers your stop and pips. So again, pretty self-explanatory. Hope you guys enjoy it, and I hope it comes in handy. Thanks for watching. Have a blessed day. Really.